Those are historically the two main types of money, different types of ledgers that we trust. And Bitcoin is a new version which kind of combines elements of both. It's a literal ledger. What problem is this ledger solving? And for the most part, what it's solving is it's even scarcer, it's even faster. It's basically scarcer than gold, faster than fiat. It's globally portable. I can memorize 12 words and bring it everywhere. I mean, for example, I live part of the time in the US. I live a little bit of the time in Egypt, for example. When I'm in Egypt, I don't have access to any gold that I have in the US. If I'm in the US, I don't have access to any gold in Egypt. But if I have Bitcoin memorized with 12 words or written down somewhere, I have Bitcoin anywhere in the world.
In her interview with Kitco News, Lynn Aldan, the founder of Lynn Aldan Investment Strategy, delves into the concept of Bitcoin and gold standards. The world has become more aware of the geopolitical tensions in the Middle East due to the recent Israel-Palestine conflict. While the unrest has wide-ranging effects, one aspect often considered a safe haven in times of unrest has remained unaffected: the stability of Bitcoin's price. The international landscape is evolving, with an increasing number of countries looking to reduce the dominance of the US dollar in global trade. Meanwhile, local currencies face their own unique challenges, which governments and central banks are actively addressing to ensure economic stability and growth. In a world undergoing rapid economic and digital transformation, the face of currency is changing at a revolutionary pace, yielding a proliferation in global crypto adoption. Bitcoin and other cryptocurrencies have the potential to revolutionize the global economy. The adoption of Bitcoin as a store of value is steadily increasing, with more individuals and institutions recognizing its merits. In Nigeria, for example, over 40% of the population is younger than 15. Young people are embracing cryptocurrencies as a means of transcending the limitations of local currencies. While some central banks have continued to increase their gold holdings, fueling speculation of a rebound ahead of a global economic slowdown. According to new research from the World Gold Council, central banks added approximately 77 tons of gold to their reserves over the month of August, up 38% from July. During the interview, Aldan expressed a preference for Bitcoin over gold. She explained that Bitcoin offers distinct advantages compared to gold. One key advantage is its scarcity, with Bitcoin ultimately reaching zero inflation, in stark contrast to gold, which experiences an average annual inflation rate of 1.5%. Now, let's direct our attention towards the few clips from interview.
So the way that markets work in terms of money, especially on the global scale, is that, over time, people want to get out of weaker monies as they can. And if there's all this kind of fencing that kind of keeps them in, but technology is a way to kind of break through that. And so it's when we see kind of these countries fail, like these currencies fail, they generally don't return to the gold standard. They if anything, they dollarize. That's usually their go-to. And so we generally see that as developing countries have currency problems, the developing currencies kind of get inroads in there. And the big question is, what happens when eventually these major developed currencies fail or begin to have their kind of ongoing inflationary spiral in a similar way you see in emerging markets? So basically when their debt levels get so high, when their interest expense is completely untenable, when we have a energy shortage, for example, and you see kind of just money printing from these central banks, what happens then? What is the apex predator asset that comes after them? In a similar way that the dollar comes after Argentina, comes after Lebanon, what comes after these major currencies when they eventually start to have problems? And really the only two options, I think, are gold or Bitcoin. In a world where Bitcoin was never invented, gold would be the only possible fallback mechanism to recapitalize the system, reset, and unfortunately probably build the whole system again. You probably would fractional reserve gold again and kind of repeat this cycle over another century. I don't know. Bitcoin presents another path we can take, and the question becomes, will Bitcoin remain secure and decentralized enough to kind of hold that burden? It's scarcer than gold in the sense that it has lower terminal supply, so eventually zero inflation, compared to gold's on average 1.5% inflation per year. Bitcoin is also portable, so you can bring it around the world with you. You can memorize 12 words, and you can bring all of your Bitcoin with you. Whereas if you try to bring dollars or gold through an airport, you're going to be pretty restricted in how much you can legally bring through and practically bring through. And so that portability and that extra scarceness gives it a really powerful advantage. But of course, it is reliant on the global telecommunication system. It is reliant on being able to survive against potential attacks or bugs. And so it's, we're still less than 15 years into Bitcoin's existence. And I think every kind of cycle it goes through is another test to see how resilient it is. And to the extent that if Bitcoin does not break, if Bitcoin cannot be captured or defeated in some way, I would expect it to continue capturing market share. And then should whatever reason it fail, gold is still a fallback option. It's something that, the power goes out and you have gold, you still have your own bearer asset money. So I still think gold has a role even in a Bitcoin future. And the main question between gold or Bitcoin comes down to, can someone figure out, can nation states break Bitcoin? Can someone try to find a way to break Bitcoin? Will Bitcoin ever fall from its own incentive structure? Like will it ever kind of centralize in a way that damages it? And if not, I think it continues taking market share.
In an age of currency devaluation, stablecoins and Bitcoin are potent financial technologies. Faced with hyperinflation and a rapidly declining national currency, Venezuelans have turned to stablecoins as a store of value and a method of conducting daily transactions. Argentina, like Venezuela, has seen economic troubles resulting to an increase in stablecoin adoption. Nigeria has experienced a significant increase in the use of stablecoins for cross-border remittances and as a hedge against naira depreciation. The adoption of cryptocurrencies and blockchain technology in Africa and beyond is more than a financial trend. As per Aldan's perspective, Bitcoin holds the potential for substantial growth, with the possibility of achieving a tenfold increase in market capitalization, transaction volumes, and overall adoption. Now, let's direct our attention towards the few clips from interview.
Stablecoins appeal to people that, a lot of these people in countries, they want dollars, but it's hard to get them.
Right.
Their bank won't sell them to them. You can only bring so much physical cash through an airport legally. And so there's only so much dollars in these countries that people can get their hands on. And stablecoins represent a new vector in there. So if we kind of look at the currency map around the world, there's 160 different fiat currencies roughly. The top handful hold on to their value pretty well. Then there's this long tail of rapidly devaluing currencies. Currencies with money supplies that are going up 15, 20, 25% per year or more in many cases. And so they seek out external monies. They say, okay, I want to hold gold, I want to hold dollars, I want to hold Bitcoin, whatever the case may be. And for some of these more tech-savvy ones, Nigeria, for example, people in Argentina have been through this enough that they've established a lot of ways to get dollars. Stablecoins are a way that they can hold dollars without trusting their local banks, and instead they're trusting in basically an offshore bank. They're trusting an external bank. It's kind of like offshore accounts for the middle class rather than just the wealthy class. And so that is an innovation, and it is serving a practical need that is out there. And I think that probably persists for quite a while, as long as either US regulators don't go after stablecoins aggressively. They could. So Argentina can't really stop people from getting into stablecoins effectively, but the US government, if they wanted to, could stop people from getting into stablecoins. And then two, if we get to a point where even the dollar itself comes under considerable weakness in, say, the Fed's no longer able to tighten, there's an ongoing fiscal crisis, that's when you could get significant dollar weakness and Bitcoin kind of breaks out from that. So I think in the intermediate term, stablecoins are a powerful monetary technology along with Bitcoin, but people do have to understand the risks, that these are centralized offshore assets.
Right.
I do think Bitcoin could be another 10x here in terms of market capitalization, transaction volumes, overall adoption. I don't think another order of magnitude would be off the table in that time frame, and I think that'd be considered very successful for that time frame.
The collapse of local currencies under dollarization could further destabilize fragile governments in volatile regions. The Central Bank of Nigeria, for instance, initially took a hostile stance toward cryptocurrencies, even proposing a ban. While its leaders have recently hinted at creating a regulatory framework for stablecoins and tokens, the consequences of such moves remain uncertain. It's a story of transformation, where digital currencies like Bitcoin and stablecoins are bridging gaps and changing lives. That concludes our conversation for today. If you have any thoughts, please share them in the comments section. If you found this content informative, please consider giving it a thumbs up and subscribing for the latest updates. Thank you for being here with us.